Hi everyone. Recently I was chatting with a friend about the topic of retail versus Wall Street and I thought it'd be worth making a video on it. So everybody knows that there must be a buyer for each seller. With that being said, each trade has a winner and a loser. So we really need to understand our competition. Guys, our competition is Wall Street. Wall Street is incredibly fierce. We have guys like Jim Simons, a genius mathematician who created algorithms that massively beat the market. We have Citadel, which has all sorts of research teams, including a team of scientists to predict things like the weather to give them an edge on commodities. We have politicians that are essentially insider trading to beat the market. All these guys have a massive edge on us retail traders. They have the best information, the quickest information, and the resources to get the smartest team of people for every job. Not only that, these guys only need to focus on making profits in the markets. They have all the time in the world. It's their only job. We retail traders, on the other hand, have plenty of commitments, whether that be work or school, which not only gives us a time disadvantage, but we also need to commit to hours that often overlap with the market hours. So, why do we think we can beat these guys? We don't have time, money, information, nor do we have connections they have. That may seem like a rhetorical question, but the answer is actually very simple. We have the advantage of size. If I'm bullish on a stock, I'll buy it instantly, and if it goes up, I'll sell it instantly and make a profit. On the other hand, an institution could be bullish on a stock, but they're going to have to concern themselves with how they'll build their position without affecting the price. Sometimes that means they might need to buy slowly for many months. Sometimes they'll have so much money and the stock will just not have enough liquidity. So despite it looking attractive, they'll just have to have a tiny, tiny position or they'll just have to ignore it. If we look at the best performing hedge fund, the Medallion Fund, we'll notice they put a cap on their assets at 10 billion. This is simply because more size than that would massively impact their strategy. Guys, Warren Buffett, known to be the best investor in the world, he's underperformed the market for over the last 20 years. Guys, if he can't beat the market, what makes us think we can beat the market? Well, he simply has too much cash with Berkshire. They have almost 200 billion cash. He said if he had only a million, he guarantees he'd annualize 50%. So the other reason we can beat Wall Street, other than the size advantage, is most likely we have a mental advantage. And what I mean is guys like Warren Buffett, extremely rich, extremely established. Money for people like Warren Buffett is just a game. It's just a number. Whether he wins or loses, it doesn't really matter. It doesn't affect his life. People like Kathy Woods with the ARK Fund. She collects fees annually. Whether she underperforms or overperforms, it's great. It attracts more attention, but she can lose billions of dollars for her investors, and she has. And she'll still collect fees and get richer. This is the difference from us retail traders because we need to make money to get richer. We need to perform to get richer. We can't just sit, collect fees, and underperform. And we care about wins or losses because it affects us. It doesn't affect people like Buffett. So we have the ambition, we have the hunger, and I believe that is our other advantage on why we can beat Wall Street. If we ever lose one of our two advantages, whether it's we lose our ambition to learn or we just get too much size, it's probably best we stop trying to beat the market, stop trying to beat Wall Street, and just start index investing. But until then, I think it's very possible to beat Wall Street, and I think we should keep going to try our best to do it.